What's good, everyone? Welcome back here to another episode on the Inner Wealth YouTube channel. Guys, today I have a really interesting video for you guys. It's going to be all about imbalances. We're going to go a little bit more in depth into imbalances. So I highly suggest that if you haven't already checked out my previous videos, that you do so that way you better understand what we're talking about today. So we're going to do a full breakdown on Dow Jones for this morning's setup. And personally, I really like this low still. I want to see lower price action. I do have this low marked out. The fact that we already have taken some downside liquidity and we have already taken this previous weekly low. So for me, this low and this low is enough to get this going with a little bit more of a retracement. So my bias was for longs, okay? But we have to understand our whole range, okay? Our entire range from this high to this low right here. You have to go with the one that swept the most previous liquidity, of course, and hit a previous area of support, being that low right there, right? Or that previous weekly low. So you have this extreme that swept the previous daily high and this extreme that swept a previous weekly low. So notice that I'm anchoring my fibs, or I'm anchoring my range from a previous area of resistance to a new found support, okay? 50% and above, I see this equal high here, okay? There's a high right here, right at 50% that we just took out with today's opening. And today is the 1st of March. Now, I am in the United States. I'm not in Eastern time, but in Eastern time right now, it's about 8 p.m. Okay. And so, as you guys can see, previous daily high here got taken. But that's really not what I wanted to talk about. I just wanted to point that out for you guys. Here on the 4-hour, you can see this whole bearish range still maintaining bearish. Okay. And for the most part, you guys can see previous daily high gets swept. We trade lower. Then we have this Asian liquidity here, right? We take out that Asian high. Then we trade lower to external liquidity. Then we have this whole range. Okay. I'm going to delete this to keep charts nice and clean. And personally, when we woke up today, I really liked the fact that I saw Dow Jones, and I guess not everyone wakes up at the same time. So I should say this morning during New York session, you guys can see we had already taken out previous daily low during Asian. And so that was a pretty strong liquidity sweep for me to look for some potential accumulations due to the fact that here on the 4-hour, yes, we are bearish, but we also have some room to come back a little bit higher. And when you move over to the 1-hour, you can see we have this insufficiency here on the 1-hour right here. We have this nice insufficiency here with some clear equal highs right there, right? Gonna mark that out. That was, of course, a draw on liquidity for the longs. And I'll show you guys how I personally played this area. So when I was trading this morning, as I was marking out previous areas of liquidity, we also had, before the open, we had the London high. Okay. And looking at this imbalance here, we came into this imbalance, and notice how price action was respecting this range here, right? For me, I was looking at, and let's cut it back to the open. I was seeing how we were coming down pretty low. We were making some relative lows here, okay? We're making some relative lows. We have this 30-minute imbalance here that is resting right inside that 1 hour order block that swept that low. That's why that order block is interesting to me, because it swept that previous daily low. So that imbalance here, but by the open, we were already trading way beyond this imbalance here. So a lot of people would ask why this imbalance on the 30-minute and not this 1 hour imbalance. And there's your answer. It is because I don't trade or really care about price action till after the New York Stock Exchange open, right? And so this 30-minute imbalance is where we were traveling to that had swept previous daily low. So now getting closer to the opening, we have to acknowledge our bearish 50-minute range, right? So this is our whole range for that high to this low right here. And for me, I really like this whole push up, previous area of distribution, and the imbalance that it created. There's imbalance here, there's imbalance here, but that one is the one that I personally wanted to see. And main reason is because these equal highs were my draw on liquidity. Okay, those equal highs up there were my draw on liquidity. So I wanted to see price action move up there. There's plenty of reason to continue moving higher versus all the liquidity that has already been taken on the downside. Notice all the lows have already been taken. Okay, so let's fast forward to around the open. We have the 15-minute here. Boom. We get a really strong reaction to the upside. Okay. So the way that I personally played this reaction to the upside was once we were coming in here, and I'll mark up the open right there. Okay, once we were coming in here, trading within that 30-minute imbalance that had swept that previous daily low, I did dive into the lower time frames and look at this accumulation. Okay, and you guys see that purple line, that right there is the open, and you guys can see. And let me just log in real quick. Okay. You guys can see, before we dive into that 1 minute, how we were accumulating before the open. The open, remember, is right here. It's this big white up candle. Before the open, we were already showing slight accumulation. Okay, we were showing that accumulation. Lower low, lower high, lower low. And remember, the only reasons that I will take a doji as a form of structure is if when we broke structure to the upside, we created an imbalance. Otherwise, these aren't really valid to me. Okay, dojis are really not structured to me unless this takes place. Okay, so let me actually just take this off so that way. I know a lot of people are not too fond of the replay button, so you guys can see this 5-minute imbalance here. Okay, so now that whole 5-minute imbalance gets traded down to, that whole 5-minute range gets traded down to, and I personally really liked that 30-minute imbalance, yes, but I'd like this 1 minute imbalance within that 5-minute up push structure that had swept, showing us the conviction to want to move higher. Okay, so me personally, I didn't like these equal lows. This imbalance was created without any sweep of liquidity, so my stop loss was below this low here. And I did enter, and I'll show you guys my entries, because I don't know why they keep coming off. Executions, yeah, it should show. Give me 1 second. Yo guys, so I am logged in to my broker, and for some reason my executions are not pulling up. I'm very unsure as to why. They were working this morning. I do have a screenshot that I'm gonna go over with you guys, that I'm going to attach to this video, so that way you guys can see the executions. But right now, for some reason, TradingView won't allow it, which is super weird, because again, like I've used this already, so just want to show you guys. But I will show you guys where I got my entries and how I utilized imbalances throughout this whole process. Okay, again, so imbalance after we sweep liquidity and break structure, and those imbalances are important. Imbalances when we have a doji for a structure and then break it, this only is validated as structure if an imbalance is created when that break of structure takes place. Okay, an imbalance as a previous area of distribution as well. So now going back to that 1 minute. Okay, you guys can see here, this imbalance was my entry, stop loss below the low here. Why that low? Because this low, this imbalance, I usually put it right below the low of the imbalance, but only if that low had swept a previous low would I have put it below the imbalance. Otherwise, my stop loss stays below the low, because things like this will happen. Is if liquidity hasn't been taken, some sort of liquidity will be taken. Okay, and just targeting that previous area of distribution was where I took my final exit. And you guys can see as well the imbalances that were created to the upside. This imbalance here, I took another entry at the beginning of at the opening of this imbalance here. Stop loss below. Now my stop loss at this point is no longer here, and it's below the low of the imbalance. Why? I want to give you a second to answer that, because I just said it, right? To pause the video, try to figure out why I moved my stop loss over here. And if you answered because this low swept a previous low, then you've got it correct, and congrats if you identified that. If you weren't able to identify that, don't worry. As we progress through this course, all 2023, you will train your eyes to see these things. So we have this insufficiency here. Okay, we have the insufficiency. I entered again when we came back into this insufficiency. So I have an order here at the open of this imbalance, and over here at the open of this insufficiency. Okay, at this point, you can either keep adding on to your position. For me personally, I felt pretty good about how much volume I had behind this trade to take it to the high. Now, notice like this entry is not a 1, 2, 3. It's basically like almost a little over, almost a 1 to 2. Me personally, with re-entries, I'm always going for like the lowest hanging fruit. It doesn't really matter to me if it's a 1-to-1, as long as it's like at least a 1-to-1. It doesn't matter, because I'm going to close it at the earliest target. Okay, and so as we enter here, we take out this high here. We just barely miss that imbalance and come back to this whole insufficiency here. We're revisiting imbalances again. Okay, come in, we almost fill this imbalance entirely. We come back to this candle here, right there at that order block, and then we reject to the upside. You guys see how we take out this high, and we have that 15-minute imbalance. Okay, and I'll just show you guys a screenshot of the executions, right? So that way you guys can have and see where I executed. Personally, my executions are all predetermined more in the moment, but all my exits are shown and planned way before I find my entry. I know where I want to see my entries, but the difference is between knowing where your entries are going to be around versus where you're actually going to enter. Usually two very different things. Okay. The exits are the most constant thing in your trading plan. The exits the entries will fluctuate. The exits are the ones that are going to be more consistent, right? Exits over entries. Prioritize your exits always. If you're someone that finds your entries before you even get close to your exits, or identify, like if you're somebody that gets into a trade before you even know your exit strategy, I promise you're just gambling. Okay? Time to switch up that plan and start including exits, because exits is the entries is not what's going to make you money. It's the exit. You can enter and still lose. But as long as you have an exit strategy, a partially out plan, right? The exit will always pay you. Or manage your risk, whichever one, right? And so now you guys can see, I'm obviously the picture is not there anymore, but you guys can see that there was my first execution, my second, and my exits were right here at this imbalance. Very simple play. Now let's go to the 5 minute. That was the other day. Let's go to the 5 minute. This 15-minute imbalance. Notice how many times that 15-minute imbalance was played. Once to the downside, twice all the way to the downside, sweeping that initial low, the Asian low, right? The Asian low of the day. After taking out the Asian low, we move and take out London high. Then we come back, and again, check this out. I want you guys to always look at these things. Always be paying attention to imbalances. Why? Check this out. We come right back down to the last imbalance available, and then begin accumulating to the upside. Now the entries here may not have been clear, but you just wait for the break of structure that swept the low and created imbalance to the upside, right? And you guys can see here, we come down lower, and of course, like, we have all of these imbalances, but the ones that I'm interested in are the ones that swept liquidity, okay, and broke structure. And so this one swept liquidity. We came down all the way here, and you guys can see right here with clear evidence, another form of entry to then take this to the upside. And notice this imbalance, 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 come right back to the open of that, right? Notice the imbalances, and then of course we go to all those equal highs. Back to that one, and then back to those relative equal highs over here, right? And I'll even take you guys to yesterday's trade that I called out. If you're on Twitter, if you follow me on Twitter, you should have been able to see this trade right here. Called out an imbalance. We were below the previous daily low right here. Okay. Create an insufficiency with some equal highs, right? Imbalance to the high, taps liquidity, then rejects. What do we have here? Imbalance. We come back to it, test it, drop. What do we have here? We have this imbalance here, yeah? Come back to it, drop. Then notice that same 5-minute imbalance. I want you guys to drag that out in time. What do we come back to? That same 5-minute imbalance. Just because price action has been traded to or through an imbalance has been traded to doesn't mean it's balanced price action. An imbalance can actually be played multiple times. Okay? Just like you guys saw here. Check this out. I want you guys to look at this 30-minute, 15-minute imbalance. Grab it, drag it out in time. Where do we come back to? Let's delete all the other makeup for now. All the other charts or markups. Drag it out in time. Where do we come back to? Notice imbalances are smart money's way of showing you which side they are on. Sometimes it won't be clear with structure alone. Like, you guys can't tell me that if you were looking at structure alone, this was clear. It very much was not. But if you follow the money, the liquidity, the imbalances, and the insufficiencies created, it becomes a lot more clear where support, resistance is to be found. Right? Notice that same 5-minute imbalance. Okay? Look how long, how many times we come into it, reject, come into it, reject, come into it, reject. Guys, that's no coincidence. I promise you, that's no coincidence. Backtest this method. Okay? Again, I'm going to show you guys the executions. That way you guys can see where I entered. I apologize that for some reason my executions is not working on TradingView. Yeah, it's super weird. I executed here. And even though there was liquidity to the downside, I was still able to be profitable. Did I catch the entire move? No. Do I need the entire move to be profitable? Absolutely not. Right? Very short and simple video. I want you guys to study imbalances. Imbalances, guys. Insufficiencies are the key. Okay? Mitigations alone will not move price. Mitigations plus imbalances plus liquidity, yes. Okay? Imbalances plus liquidity, yes. Mitigations plus liquidity, yes. Mitigations alone, no. Imbalances alone, yeah. Liquidity alone, yeah. Right? Structure just goes hand in hand with that. I want you guys to really commit to backtesting this. This is so powerful. Right? People charge so much money for this information. It's out here for free now. No excuses to not be learning. No excuses to not be studying and backtesting. Anything that you guys see here that's new, it's not for you guys to just grab and go test it on a live account. And oh, okay, Bash posted it, so it must be true. No. Challenge everything you see. Challenge everything you see until it's proven to work and serve you. If it doesn't serve you, then move along and take yourself to the next thing that does work for you. But you won't know until you actually backtest this and test it out. So I'm going to let you guys go. Again, I appreciate you guys so much for tuning in. I would really, really appreciate if you guys help me with just a like and a comment. Let me know any comments, questions, or observations that you may have had in these videos. You know, let me know down below what more you guys would like to see of. If, you know, any tips, anything like that, is very much welcome. If you guys didn't like something, again, like, go ahead. I don't really care what type of criticism I get. It's all feedback that I appreciate. So with that, guys, I'll talk to you guys soon. Appreciate you guys, and you know where to reach me. Link in the description. All right, peace.